Hello, welcome to the market opening bell for Thursday, May 22nd, 2025. The State Council Information Office will hold a press conference at 3 p.m. today to discuss science and technology finance policies. Attendees include Vice Minister of Science and Technology Chiu Yong, Deputy Governor of the People's Bank of China, and Director of the State Administration of Foreign Exchange Zhu Hexin, and officials from the National Finance Regulatory Administration and the China Securities Regulatory Commission. Hong Kong stocks rose on Wednesday. The Hang Seng Index opened 54 points higher, later peaking at 23,917 with a gain of 235 points. It closed up 146 points or 0.6% at 23,827. The H-share index rose 71 points or 0.8% to 8,660. The Hang Seng Tech Index gained 26 points or 0.5% to 5,342. Total market turnover was 216.2 billion Hong Kong dollars. Southbound trading saw a net inflow of 1.427 billion Hong Kong dollars compared to 6.332 billion dollars the previous day. Technical analysis, the Hang Seng Index successfully broke through 23,700, reaching the 23,900 target. If it surpasses 23,900, the next target is 24,500, followed by 24,800. Initial pullback support has shifted to 23,400. Mainland China's three major indexes all rose. The Shanghai Composite Index closed at 3,387, up 7 points or 0.2%. The Shenzhen Component Index closed at 10,294, up 45 points or 0.4%. The CSI 300 Index closed at 3,916, up 18 points or 0.5%. Total turnover in Shanghai and Shenzhen markets was 1.1733 trillion yuan, up 3.8 billion yuan from the previous day. The renminbi central parity rate fell for two consecutive days to 7.1937 against the US dollar, down 6 pips from the previous trading day. In spot trading, both onshore and offshore renminbi fluctuated around 7.21 in the morning. Xiaomi will hold a product launch event at 7 p.m. tonight, expected to unveil its first SUV, the Xiaomi YU7. According to mainland media, scalpers have emerged online claiming a 99% success rate in securing YU7 pre-orders with verifiable records and offering nationwide first batch delivery. Scalping fees range from 1,000 to 5,000 yuan, with some as high as 12,000 yuan. XPeng Motors announced its Q1 results yesterday. First quarter total revenue was 15.81 billion yuan, up 141.5% year-on-year, surpassing expectations of 15.63 billion yuan. Vehicle sales revenue was 14.37 billion yuan, up 159.2% year-on-year, but down 2.1% from Q4 2024. Net loss attributable to shareholders was 660 million yuan, compared to 1.37 billion yuan in Q1 2024 and 1.33 billion yuan in Q4 2024. The quarterly gross margin was 15.6%, up 2.7 percentage points year-on-year. The vehicle gross margin was 10.5%, up 5 percentage points year-on-year and 0.5 percentage points from Q4 2024. The company forecasts Q2 revenue of 17.5 billion yuan to 18.7 billion yuan and vehicle deliveries of 102,000 to 108,000 units, up 237.7% to 257.5% year-on-year. XPeng's chairman He Xiaopeng said at the earnings call that the XPeng G7 will begin pre-launch promotion in June. A new luxury sports sedan, P7, priced at the 300,000 yuan level, will launch in Q3, and a large SUV based on the Kunpeng hybrid platform will debut in Q4. Baidu Group also released its Q1 results yesterday. Total revenue was 32.5452 billion yuan, up 3% year-on-year. By segment, core revenue was 25.5 billion yuan, up 7% year-on-year. Online marketing revenue was 16 billion yuan, down 6% year-on-year. Non-online marketing revenue was 9.4 billion yuan, up 40% year-on-year, driven by the intelligent cloud business. iQIYI revenue was 7.2 billion yuan, down 9% year-on-year. Net profit was 7.717 billion yuan, up 41.6% year-on-year, significantly exceeding the forecast range of 3.494 billion yuan to 4.316 billion. Non-GAAP net profit was 6.469 billion yuan, down 7.7% year-on-year, but above the forecast range of 4.806 billion to 5.68 billion yuan. Lenovo Group will announce its results today. According to IDC data, Lenovo smartphone shipments in the last quarter were 14.6 million units, up 11% year-on-year, but down 2% quarter-on-quarter. Growth was driven by a 16% year-on-year increase in Europe, Middle East, and Africa, and a 7% increase in India. For the fourth fiscal quarter ending March 31st, 2025, revenue is forecast at $15.7 billion, up 13.6% year-on-year, but down 12% quarter-on-quarter. Pre-tax profit is forecast at $479.7 million, down 28.5% quarter-on-quarter. Concerns over rising U.S. debt triggered by President Trump's tax cut bill, combined with weak demand for the U.S. Treasury $16 billion 20-year bond auction, drove a surge in bond yields. The U.S. 10-year Treasury yield rose 10.8 basis points to 4.589%. U.S. stocks fell sharply, with the three major indexes recording the largest single-day declines in the past month. The Dow Jones Industrial Average dropped as much as 892 points, or 2.1%. The Nasdaq Composite fell up to 343 points, or 1.8%. The S&P 500 declined as much as 109 points, or 1.8%. Losses narrowed by the close. The Dow ended at 41,860 points, down 816 points, or 1.9%. The Nasdaq closed at 18,872 points, down 270 points, or 1.4%, and the S&P 500 finished at 5,844 points, down 95 points, or 1.6%. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, closed down 0.7%, with Alibaba falling 1.3% and XPeng Motors rising 13%. Large-cap tech stocks generally declined. Tesla fell 2.7%, Nvidia dropped 1.9%, Apple slid 2.3%, Amazon decreased 1.5%, while Alphabet gained 2.8%. United Health fell 5.8%, the worst performing Dow component, amid reports it secretly paid bonuses to nursing homes to reduce patient hospital transfers. Retailer Target dropped 5.2% after lowering its annual revenue forecast, citing reduced consumer spending on non-essential items. Our stock pick today is China Medical System Holdings, stock code 867. China Medical System primarily engages in the marketing, promotion, and sales of prescription drugs from domestic and international pharmaceutical companies in China. It also manufactures and sells several prescription drugs, with its main products covering areas such as cardiovascular, digestive, dermatology, medical aesthetics, and ophthalmology. In 2024, its operating performance was affected by the implementation of the eighth batch of China's National Volume-Based Procurement (VBP). For three VBP products, Dailixin, Yuxifu, and Boyiding, generated a combined drug sales revenue of 2.691 billion yuan, down 28.8% compared to 2023. Apart from these three VBP products, most of its other core products are exclusive and innovative, achieving a combined drug sales revenue of 4.551 billion yuan in 2024, up 4.1% year-on-year, accounting for 52.8% of total revenue. The group drives innovation through a dual approach of collaborative R&D plus independent R&D. By the end of 2024, its portfolio of innovative products approved for marketing in China grew to 5, covering 6 indications, with 4 innovative drugs: Yiluqu, Weifuray, Meitaitung, and Weizhuke, included in the national reimbursement drug list and entering large-scale clinical use. The group continues to make breakthroughs in new product R&D, with 2 new drugs submitted for marketing approval last year, 3 new innovative drug collaborations, 3 medical aesthetic product collaborations, and over 10 clinical trials progressing smoothly, aiming for annual approvals of innovative drugs. The group has intensified its efforts in the out-of-hospital market, enhancing the breadth, precision, and depth of coverage in pharmacies and chain drugstores. Through a training system for chain drugstores, it helped improve the professionalism of pharmacy services, benefiting patients. By the end of last year, its promotion network covered over 50,000 hospitals and medical institutions and approximately 300,000 retail pharmacies in China. Recently, the group announced a proposed spin-off and independent listing of its subsidiary, Demei Pharmaceutical, on the main board of the Hong Kong Stock Exchange. It also plans to distribute all its Demei Pharmaceutical shares to shareholders in kind. Demei Pharmaceutical is an innovative pharmaceutical company focused on skin health, managing the group's dermatology business in China with integrated R&D production and sales of dermatological prescription drugs, and medical-grade skincare products. It aims to provide comprehensive skin health solutions from prevention and treatment to long-term care. It has developed a diverse and differentiated product portfolio, fully covering major dermatological conditions with significant unmet clinical needs. Upon completion of the proposed spin-off, Demei Pharmaceutical will be able to raise funds directly from the capital market, supporting its existing business and future expansion without relying on the rest of the group. This move will accelerate Demei Pharmaceutical's growth, improve its operational and financial performance, and benefit shareholders of both China Medical System and Demei Pharmaceutical with potentially higher returns. Recommendation: buy at 8.65 Hong Kong dollars, target $9.5, stop loss at $8.2. I do not hold the above stock.